This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices rose about 3% on Wednesday, resuming the commodity's upward path, as investors weighed conflicting statements on the possible withdrawal of some Russian troops from around Ukraine. Russia's threatening posture has dominated oil markets for the last few weeks, with concerns that energy supply disruptions from the major producer adding to an already tight global market that augurs for $100 a barrel oil before long. The market remains extremely tight and prices had been on an upward trajectory prior to the escalation. The softening of tensions may have only delayed the march to $100, said Craig Earlham, senior market analyst at Oanda.
Middle East benchmark Dubai crude soared to a record this week while spot premiums for April loading Russian oil jumped to their highest in more than 2 years in Asia, trade sources said on Wednesday as prices returned to pre-pandemic levels. The global supply-demand balance has tightened as the Organization of the Petroleum Exporting Countries and its allies are lagging behind commitments to increase output by 400,000 barrels per day each month. Demand, meantime, is robust as refiners globally are cranking up operations to reap higher margins on gasoline and diesel.
Moving on to the top news in the energy sector.
Russia would be ready to reroute supplies to other markets should new Western sanctions target its energy sector, Finance Minister Anton Silvanov said on Wednesday. Silvanov did not say how Moscow would divert its energy exports but said that Russia's foreign exchange reserves, national wealth fund and a budget surplus should shield its economy and banks from any possible sanctions hit. The United States and its allies are considering new sanctions including against Russia's largest banks, economy and energy sector, with export controls possible, in the event that Moscow invades its neighbor Ukraine.
India's gasoil and gasoline sales rebounded in the first fortnight of February from the previous month, indicating a recovery in industrial and consumer demand as states lifted most of the COVID-19-induced restrictions. States in India have opened schools and colleges, and eased night curfews among other curbs, after a sharp decline in infections. Gasoil sales by the country's state fuel retailers amounted to 2.65 million tons during February 1, data compiled by state-owned refiners showed, up 6.7% from the same period last month, the data showed. Gasoil sales were however down by 6.95% from a year ago and by 14.7% from the same period in 2020.
Next, we have the top news in metal markets.
Gold prices rose on Wednesday after the United States said Russia was still building up troops around Ukraine and as markets looked ahead to the release of minutes from the Federal Reserve's last policy meeting. Spot gold was up 0.7% at $1,866.67 per ounce by 12:16 p.m. Eastern Standard Time, 17:16 GMT. U.S. gold futures gained 0.6% to $1,867.50. Gold is attracting a wide range of investors that are looking for protection as they are realizing that there's not going to be a quick resolution to this Russian-Ukraine situation, said Edward Moyer, senior market analyst at brokerage Oanda.
Aluminium and other base metals climbed on Wednesday as tensions eased between Russia and the West over Ukraine and focus shifted to an energy crunch causing smelter shutdowns, mainly in China and Europe. 3-month aluminium on the London Metal Exchange, LME, gained 1.4% to $3,253 a ton by 1700 GMT. The lightweight material used in transport and packaging is the most energy-intensive metal to produce. I think it's mainly a relief rally from the calming geopolitical situation, said Xiao Fu, head of commodity market strategy at Bank of China International. We will now look at the top news in the agricultural sector. China can reduce its soybean demand by 30 million tons by continuing to promote lower soymeal rations in feed and using alternative proteins, the official Xinhua news agency said on Wednesday, citing unnamed agriculture officials. China issued guidelines last year recommending the reduction of soymeal and corn in pig and poultry feed, as it sought to reduce its dependence on imported grains. China imports almost 100 million tons of soybeans each year to make protein-rich soy meal for its huge livestock sector.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.